Diane, your thoughts on the number? I'm also struck by the revisions, the number of multiple job holders. There's some interesting data on temp help. What's your take?
Well, the overall job numbers, we are seeing the slowdown that we expected to see, and I am worried, like Steve is, that we're going to see more of a pullback in hiring. Something's got to give. Either we see sort of confidence in the business sector come back and hiring pick up again, or we're going to see the slowdown in hiring, which will affect consumer spending, and the tariffs are not good news out there. There was a silver lining to this number on the participation rate. Almost all of the increase in participation rate came from black teens and those with less than a high school degree. And that's really important because it means we're pulling in people who were formerly not re-engaged in this economy. And that's something Chairman Powell has been very focused on, and running the economy, sustaining the expansion, bringing in the slack that people didn't believe was there. And I think that is something that's a positive in this report, is the number of people that are finally throwing their hat in the ring are people who haven't thrown their hat in the ring in the past. Teens in particular really took it on the chin in the wake of the crisis, because they had to compete with much older workers who had to put food on their tables. And now coming back, and particularly in the minority community coming back, that is welcome news.
David, there's also wage growth. I mean, that came in better than expected, 3.2% from last year. How do you square what was, overall a pretty healthy jobs report with your recession forecast and some of the other mixed signals we're getting from the economy, the worst ones?
Right. Well, look, what matters most is total personal income, or wage income. And so average hourly earnings were up 0.3, but the work week was down 0.3. So actually, nominal work-based income in the report today was flat and probably negative in real terms. That's a question mark in front of the consumer for the third quarter after a very strong second quarter. In answer to your question, and I think that Steve really answered a lot of them, was what you try and do in the non-farm payroll number as an economist is look at the forward-looking indicators, or the components that will give you a window as to what the future is going to look like. The stagnation in temp agency employment in the past 5-6 months, well, that's a worry sign. You're taking a look, for example, at the downward revisions. This is becoming a pattern, Sarah. 4 reports in a row, the revisions have been to the downside. That is what economists say is a very pro-cyclical event, in the sense that typically happens when the economy is losing momentum. But I think that the defining feature of this report today was the negative 0.7% reading in manufacturing hours worked, because Eric Rosenberg is focused on the unemployment rate, which makes it almost guarantees he's going to make a policy mistake if he was running the Fed, because the unemployment rate is actually in the Conference Board's lagging indicator. And yet, what is in the leading indicator, and the only employment component in the Conference Board's leading indicator, is the manufacturing work week. And it went down significantly in the latest month, on top of the fact that overtime hours are also very weak. So I think that when you look beneath the veneer of this number and you take a look at what it's telling about the future, it actually was about as downbeat as it could possibly get.
David, you've been critical of the Fed. You said it's one of the few things with the president with which you agree. Yeah. So after the cut this week, have they done enough?
No, not at all. Look, it's clearly a divided Fed. It's a very divergence of opinions on the Fed. And you can see that. I mean, 2 dissents doesn't happen all the time. And there's a lot of other people that were openly saying, why bother cutting rates at all? And the people that don't want to cut rates are obviously looking at the last employment report that we got for June. They're looking at the Q1 GDP and the 4 handle on the consumer, and of course the 0.4 we got on retail sales. I have answers for all those questions. I think there were a lot of temporary factors behind those bullish reports. So my view on the economy is a lot different than a lot of folks on the Fed.